This is Jeffrey Cleveland, Chief Economist at Payden Regal Investment Management. Today I want to talk to you about two economic factors that are impacting financial markets. The first is recession risk. The second is oil prices. So let's talk about the first, recession, the R word. We are hearing that word from clients in the last couple of weeks more than we heard it used in the last few years. Maybe due in part to Wall Street. Wall Street investment banks sent out a note saying that there was a 23.5% chance of a recession in the U.S. this year. Gee, thanks Wall Street. 23.5% chance, not 24%. I appreciate that. We at Payden, we don't think there's a recession on the horizon, not in 2016 and not in 2017. And here's why. If you look at just one indicator, the unemployment rate, typically on the eve of a recession, so in the 12 months leading up to a recession, if a recession was imminent, the unemployment rate would be rising. It would be rising anywhere from 0.3 percentage points to 0.5 percentage points. What's happened to the U.S. unemployment rate in the last 12 months? It's fallen. It's fallen by almost a full percentage point. It is now at 4.9%. This is not something that would be happening if we were on the cusp of a recession. So a recession is not imminent in the U.S. This has huge implications for equity markets and for risk assets, in particular high yield, for example. So that's the first category. The second one, oil prices. We're hearing a lot from clients on the decline in oil prices. You can follow every tick day by day. It's a lot of headlines. But it's really important to determine whether the decline in oil prices is due to a slump in demand or a supply glut. And we think it's due to a supply glut. And here's why. If you look at the data on the supply and demand for crude oil on a global basis, for 23 of the last 24 months, supply has exceeded demand. And this is why prices have fallen so dramatically. It's an unprecedented stretch of time where we've seen this oil glut. That's what's keeping oil prices low, not a slump in global demand. This also has huge implications for risk markets, in particular areas of the U.S. high yield market. So recession, we don't see one. Oil prices have declined. It's a supply story. Those have big implications for financial markets. I'm Jeffrey Cleveland from Los Angeles.